This is the Scrap Metal and Commodities Recycling Report by BENLEE Roll-Off and Open-Top Trailers and Raleigh Goldsboro Metal Recycling, March 21st, 2016. In this report, last week most commodities went up in price as the US dollar lost value, steel tariffs continued reducing imported steel into the US, and US steel production rose. In this chart, US steel production rose in the last reporting week to the highest level in about 5 months. Terrific news on all fronts. Most know oil prices hit multi-year lows about 2 months ago. Since then, prices have leaped higher and are now almost 50% above where they were just 2 months ago. Gasoline prices, while still low, have risen greatly as well. Very low oil prices were great for putting money in people's pockets and then having them spend on more goods and services. While tough to see on this chart, the oil rig count was up 1 last week. Very importantly, this was the first increase in about 3 months. But the count is now about 74% below the high of about 17 months ago. This major drop has resulted in even more steel mill layoffs. US Steel announced last week an additional 800 layoffs in the tubular part of their business. While scrap prices remain steady in the US, there is word of upward movement in export pricing. This, combined with the highest US production in 5 months, has many now saying April scrap steel prices could be up $20 per gross ton or more, which is more than 75 cents per 100 pounds. Hot-rolled coil steel prices continued coming up from their lows. Last week, the U.S. announced a preliminary ruling of anti-dumping actions against 7 countries for hot coil steel. This will clearly be followed by multiple price increases on finished steel in the months to come. Stainless steel scrap prices, like steel, are seeing increases as well. Copper prices hit a new 4-month high last week, but settled down a bit. A weak US dollar was part of this increase, as well as some stable economic news out of China. Copper prices could remain under downward pressure due to Peru grew their January copper production an enormous 44% over January 2015. Peru is the world's 3rd largest copper producer after Chile and China. Copper inventories in the key global warehouses continue to come down heavily due to some of the largest copper miners have shut down mines due to these low prices. But as said, Peru is filling some of the void. Aluminum came down a bit in recent days when looking at this 30-day chart. And when looking at aluminum's 5-year chart, while prices are above their recent multi-year lows, they have been in a tight range for about 4 months. A key driver of good jobs and uses of commodities is U.S. home construction. Housing starts, while still very depressed from their highs of 2005, were about 31% higher in February than a year ago. Again, good news. The U.S. Federal Reserve, led by Janet Yellen, kept interest rates low after their meeting last week. In the follow-up to the decision, Chair Yellen said the U.S. consumer was in good shape, but manufacturing was showing weakness, with low oil and gas activity being a key reason. She also said the global economy continues to grow, but at a slightly slower rate than earlier forecast, and Japan's growth, the world's 3rd largest economy, went negative last quarter. Related inflation remains at a very low 1.4%, which is lower than the Fed's target of 2%. Last week, Nucor, the largest steel producer in the U.S., announced their earnings would be lower than expected in Q1, but said that things will improve for the year and their stock rose. Tariffs, along with price increases and increased volumes, will clearly boost their profits. Additionally, natural gas prices near 15-year lows reduces their production costs. With that, we hope all have a safe and profitable week. My name is Greg Brown.